ESG investing is for losers. What was that from Ace Ventura, Pet Detective? A loser. Yeah, oh, I feel good about myself. I've got my ESG funds. You're a moron. You're a moron. Okay? You're seeing substandard returns. Do you get it? You're going to lose money. Dumb, dumber, dumbest. I don't put it any other way here. Okay? You may feel all good about yourself. If you get it. If that, I guess, all right. You know what? If that's your main objective when it comes to your financial preparation and building wealth is making yourself feel good in regards to where your money, have at it. Have at it. Go ahead, lose money. Anyway, got a series of state treasurers from all over the country that are pushing back against ESG investing. Institutional investors that are finally starting to get it. Again, these are people that are doing the right thing. I gave the example last week on the radio show. We're talking about the morons in the state of New York who, because Silicon Valley Bank they're investing a lot of green stuff and they're very progressive. And they had somebody there that was making sure that, I don't know, you were checking all the boxes and the people that you hire. Yeah. Well, guess what? Your fund lost tens of millions of dollars because of that. Tens of millions of dollars. I'm going to make this very clear. I don't give a shit what you do in your bedroom. I don't care. I don't box check. Can you get the job done? Are you the best at what you could do? See, we have a thing called meritocracy investing here at Markowski Investments. That's our trend here. We want the best. It's just that simple. And many firms out there have gotten away from that. They have. Oh, you don't think I know the managers and people that are working at some of these major firms on Wall Street? Oh, yeah. It used to be, they had certain firms that would go to certain colleges and universities, and they would only hire the best and the brightest. They didn't give a damn what your color was or anything. They didn't even take that into consideration. It's how smart you are, how hard you worked. The hours that we put in back in the day, it was like almost like pledging a bloody fraternity or playing a D1 sport. Constant work all the time. No. We got to make sure that this one checks this box or that box. How's that working out for these firms? Like dog shit. Yeah, I talked to the manager. I know who's working there. The culture's completely changed. And the performance has gone in the toilet. Glad to see these treasurers from these states pushing back from this. Yesterday, the 23 state treasurers, financial officers sent out letters to some of the biggest offenders out there, proxy advisory firms, and the world's largest asset managers, including Institutional Shareholder Services, Glass, Lewis and Company, BlackRock, Vanguard, State Street, Fidelity. We asked pointed questions about how these institutions are fulfilling their fiduciary obligations to our beneficiaries. We demanded that these firms provide us with the economic analysis that justifies their support for shareholder proposals requiring racial equity audits. This is a true story. It's a true story. It's probably going to get me in trouble with the algorithms. I don't remember the exact year. I don't know. Had to be maybe 2009, 2010. I get a phone call from the Labor Department. And quite frankly, I don't know how the phone call got through. That would have normally been screened. Got through, and they're asking me about, the breakdown in race at our company. And it really pissed me the hell off. It did. I was pissed. What the hell is this? Calling me up, asking me? I don't even take it into frickin' consideration. The thought has never crossed my mind. And I had no idea. And I got ticked off at the time, and yet my answer was again, and I hung up. I hung up on the person, but I hung up in a way. I said, "Listen, I said I'm blacker than Obama in the summertime. Is that good enough? Goodbye." Click. Again, I told my brothers about it, and they were kind of unhappy. "You sure you talk like that?" Never heard from them again. But who knows? Anyway. By supporting, this is from the Wall Street Journal, this letter to the editor, by supporting shareholder resolutions that compel companies to pursue public policy aims, asset managers are ignoring their fiduciary duty to act in the best financial interest of American workers. Again, that's something we've taken seriously. This is something we've always done at Markowski Investments. Is put our clients' interests above our own. And that is to do the best possible job for our clients. Obviously, you have to examine risk tolerance, a myriad of things when we're putting together portfolios. Let me tell you something I'm not going to consider. I'm not going to consider how many, I'm scared Dave Chappelle, alphabet people I have working at the company. I mean, back in the day, I don't even know why it would be a question. I mean, I never even took it into consideration. It didn't even bother. I'm going to go back eons ago. Let's go back to early 1980s high school football. I mean, it was kids in high school that played on football. We went to school with. Again, we knew that they were in the closet. Didn't matter. We're friends with them, nice to them. They eventually come out. Who the hell cares? Who the hell cares? It never crossed my mind or mattered to me. And again, that's how life should be. We don't fill quotas, okay? The only thing we consider is excellence, merit. That's America, people. Okay? You got these people out there that want to change that. They want to make it about something else. Okay? If you don't like what this country was built on, why are you trying to change it? Why? I mean, if you don't like freaking hamburgers, don't go to McDonald's. Pick up your ass and move. Find a country that suits you. But this country has always been about merit. And I know, we've got our, pockets of nepotism, and I get all that. I understand that, but that's not who we are. U.S. securities rules permit a shareholder owning as little as $2,000 in a stock for 3 years to submit a proposal to be voted on by the company's shareholders. The incredibly influential but unregulated proxy advisory firms, a duopoly consisting of ISS, which is Institutional Shareholder Services, and Glass Lewis, then provide institutional investors with vote recommendations regarding all of these proposals. These recommendations have a significant effect on the voting results and ultimately the financial well-being of millions of retail investors. What proxy advisor reports don't provide is any evidence that these recommendations will maximize value. For both 2022-2023 annual meetings seasons, activists have introduced hundreds of shareholder resolutions demanding that companies sacrifice growth and competitiveness to pursue political agendas. With the explicit support of the Securities and Exchange Commission, a wink and nod from global investment firms, and help from proxy advisory firms, activists can even oust and replace board members who don't support their political goals. In 2022, for example, shareholders asked Comcast to prepare a report reviewing the company's retirement plan options with the board's assessment of how the options align with its climate action goals. This was meant to bend the fiduciary standard to achieve political purposes with retiree funds. The proposal failed, but had it passed, the result would almost have surely been lower returns or higher risk for investors. 2022 proposal at Republic Services, a waste and recycling management company, requested an environmental justice audit to assess the racial impacts of its operations. And for 2 consecutive proxy sessions, the SEC has allowed proposals on proxy ballots that push blatantly illegal discrimination under the guise of equity. 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 Yeah. Should I get into my Kurt Vonnegut, Harrison Bergeron story that we talked about? Climate change, of course, leading issue for shareholder proposals last year. The number of proposals on environmental issues has increased 51% since 2021. Proposals on social issues have increased 20% over the same period. These measures diminish returns. Diminish returns. Take a frickin' look at the numbers. You are going to have less money in your portfolio. Listen, especially in these retirement, these pools of money. You know, if you on your own want to be a moron and lose money, you know what? That's up to you. Here's another story, true story. True stories. David Chappelle, remember the Chappelle show, True Hollywood Stories with Charlie Murphy, Eddie Murphy's brother. Anyway, this is the true stories, true Wall Street stories of the Markowski brothers. Oh man, I could have fun with that. So this is 2016, 2017. We're approached by this firm in Buffalo, New York. And they're looking to come up with a succession plan, and the manager at the time thinking about selling their firm and exiting the firm. They got in contact with us. Listening to them and checking out their website, and then digging a little bit deeper in regards to their investment strategy. And they had this, ESG. It wasn't even called ESG at the time, but it was very, we're not investing in these things and that things. I'm curious at the time because it was kind of new to some degree, this whole thing. And I go up to Buffalo. I fly up to Buffalo, and I meet with one of the owners of the firm, and I'm taking a look at how they're going about managing money and the decisions that they're making. And I'm very blunt. I said, your performance is substandard. Yes, but we're doing things this way and that way because of the environment or this and because of equity. And I'm like, that's nice. We don't do that. We don't do that. Again, I didn't. If this is something that, again, that their clients wanted, it's their money, okay? It's their money, and obviously it wasn't a good fit by any stretch of the imagination, and I left it at that. But you listen, okay? I'm a libertarian type of guy, okay? I am. And I've talked about this in regards to the war on drugs and issues out there over the years and a myriad of different things, okay? If you want to go out and get lower level of returns, go ahead. Go right the hell ahead. If you come to Markowski Investments and you ask us to put together, these are some of the things we're looking for. We want to have this in regards to climate change, and we don't want to have any of these companies in our portfolio. See ya. Don't bring your business here because I'm not interested. I'm not interested. I have one goal. Okay, again, manage risk and make my clients money. Build wealth over time. That's what we're looking to do. You get it? So no. If you expect us to box check, can't invest in this type of, go find somewhere else. You want to lose money? Don't do it at my firm. And it's across the board. Again, another true Markowski story. Go back to the 1990s. I've talked about this before. When, everybody, sell all my blue chips. I want to own more tech and .coms. We're not going to do that. We're not going to do that. And I talked about how difficult it was at that point in time, one of the most difficult periods of time for our firm, because we stuck by our guns. No, we're not going to do that. You want to go ahead and lose money, go do it elsewhere. You're so smart, go ahead. Take your money, open up an E-Trade account, Ameritrade account, go trade with Stewart and see how well you're going to do. We are not going to destroy portfolios for the latest fad. Doesn't make any difference. You understand? We have certain rules that we follow, and this ESG stuff breaks them all. Anyway, again, this was interesting too. They had they put out, this is this group, they put out they basically an ESG vote ranking. And these weren't even ESG funds. These were non-ESG branded funds. And these are how they voted on ESG oriented shareholder proposals. And they ranked them. These are fund managers that are out there. Again, and these are some of these fund managers out there that proclaim to be kind of conservative. Yeah, Northern Trust, F- to 6 top 40 firms that backed more than 90% of the ESG proposals. Invesco, Perpetual Select Trust, Deutsche Bank, Swisscanto, Northern Trust, Storebrand Asset Management, BNP Paribas, other prominent firms that got D and F grades. Goldman Sachs. Again, I've told this before. Prior to Goldman Sachs becoming a publicly traded company, we work with them back when they were a firm to actually they've kind of led by example. They did things the right way. As soon as they went public, went to hell in a handbasket. State Street, TIAA CREF, Schwab, UBS, Guggenheim. Even, one of the ones out there that always gets pointed out, BlackRock, Larry Fink's BlackRock, they got a C grade. Yeah, why is this? Well, you got a lot of cowards out there. Got a lot of cowards that want to get invited to the right cocktail parties, right events. And again, who controls the social scene in New York? Who controls the social scene in Washington, D.C., and San Francisco, Chicago, where many of these asset managers reside? That would be the left. That would be the left. And again, you want to be in these people want to be involved in the social scene and be looked upon, and they want the lefty progressives out there to not look down upon them. They kind of follow suit. Again, this is my promise to everybody out there. We'll never do that. Not in a million years. WatchDog on WallStreet.com.